Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up happy.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Deck it quick. While the average man looking at it's sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot heat. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ET. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits.
Hey, yo! I caught you off guard there, didn't I? I surprised you. You weren't ready for that. I know. I did it on purpose. What's up? Welcome to the True Trading Group live stream, folks. My name is Michael Edward Paranelli. I go by Michael Edward. I'm the co-founder and head trader at True Trading Group. What a day. Worst day in the market since 2022. 1,000% decline in the Dow. Almost 3% decline on the S&P, over 4% on the NASDAQ. I love it so much. I do. I really do. You guys might have expected me to come on this live stream and be scared, but I love this. I do. I love what's happening. And I'm going to explain to you why I love what's happening. And I think you should all love what's happening too. You might think I'm crazy. I really don't think that I am. We're going to go over and we're going to discuss it all today on this live stream. So like I said, I'm the co-founder and head trader of True Trading Group. Now, in case you guys didn't know, real quick, I do like to talk about this because it is very nice. We did receive the Benzinga FinTech Chairman's Award for Best AI Analysis Tool. Okay. And there we are on stage at the Benzinga FinTech Award ceremony, receiving that award. It's nice to see industry leaders like Benzinga recognizing us for what it is that we're doing, implementing AI technology into our platform to help our members make money. The level 3 analysis tool has really been a phenomenal source for a lot of our members. We actually had one of our members today actually said they just had a 5-figure day today. It's their biggest day ever, and they were using the level 3 analysis tool to execute on that. And it's just amazing. And we actually have a data partnership agreement directly with the NASDAQ that we get that level 3 analysis from, the level 3 data from. The NASDAQ actually invited us down to the NASDAQ facilities and the exchange a few months ago. We got a whole tour of the facility. My business partner and I were actually able to witness the closing bell, which was a lot of fun. There we are at the closing bell. And then to celebrate our data partnership agreement, they actually put our name and logo up on their big LED screen or billboard in the middle of Times Square to congratulate us. It was really awesome. It was a nice accomplishment and some really nice recognition for us as a company, and to solidify that agreement and that partnership with the NASDAQ. So you guys could, be confident and take solace in knowing that when you guys join True Trading Group, you are joining a company that works directly with the NASDAQ. You're joining a company that received a Global Benzing a FinTech Award. So truly a really amazing, legitimate platform that has over 10,000 members in 114 different countries. But aside from that, it's not just about awards here. We are the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, and individual mentorship for stocks, options, crypto, and futures. We day trade, we swing trade, we cover long-term investing. There's literally something for everybody here at True Trading Group. And if you're wondering why I should listen to anything it is that we discuss on this channel, it's not because I claim to be the world's greatest trader. It's not because I'm right all the time. I mean, I'm right a hell of a lot more than I'm wrong, but I'm wrong sometimes too. The reason why I think you guys should listen to what it is that I talk about on this channel is because I was trained by professionals on Wall Street. My first job out of college was working at T3 Alpha Fund in New York City. They had me go through a training program before they let me touch $1 of the fund's money. And then 2008 happened, which was the huge stock market crash. It was the Great Recession. But it's also the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and the head trader at True Trading Group. And along with my team of 8 other professional full-time trading mods and an over 30-person staff, we've helped thousands of members from all over the world to reach their goals. Okay, so if you guys are new to the channel, make sure you subscribe, smash that like button, turn on your notifications, make sure you never miss out on any of these live streams, right? Because we're dropping golden nuggets, give you free lessons and trade ideas and market commentary that can help you guys become better traders and can help you guys make money, become better and smarter investors. And that takes me right up until today's price action. And, today is one of those days. Today's one of those days where I start to get text messages from people that don't follow the markets. My phone was going off nonstop today with friends, family, because they know what I do, obviously. And everybody starts texting me on a day like today. And days like today don't feel good. It's definitely not a day to look at your long-term portfolio. But days like today are honestly what traders live for. We had one of our moderators today had a 350% gain. A 350% gain on Coinbase put options. Where else can you make 350% in a day? I mean, that's just nuts. That's absolutely nuts, right? That's just insane. 350% in a single day. And that's just one of many. There was a couple other triple-digit gains that were executed inside of chat today. Shy Martin, one of our pro trading moderators, just had a monster of a day today. And she's been having a monster month. Like going back to the middle of February, she's been all over this move to the downside. She's been in swing trades to the downside. She's been in put options galore. It's just put options, put options in Amazon, put options in Alphabet, put options in Apple, put options in Coinbase, put options in Nvidia, put options in Airbnb, put options in CrowdStrike. I mean, it's just been nonstop put options over the course of the last several weeks. And that's obviously the direction that you want to be in because the markets have been selling off and they've been selling off pretty hard. And that takes me to kind of the conversations that I want to have with everybody here today on this live stream. Sure, yeah, we can talk about kind of the day trades and the swing trades and everything that was executed today. And it really, Coinbase today, I'll just go over that one because that was the biggest winner of the day today was Coinbase. And it was actually Shy's number one trade idea on the day. And it just kind of goes to, our analysis on on Bitcoin. And, you know, we've been bearish on Bitcoin since we broke 100K. If you guys have followed my YouTube channel for the last several months, you'll know that we got bullish on Bitcoin leading up to the election. We said we think that we crack over 100K, and then you probably get a pullback from there. And I think that the pullback in Bitcoin is going to take you back into minimum the low 70s, possibly the high 60s. And I'm just telling you guys now, I'm probably going to be a buyer of Bitcoin in the high 60s, lows like 68 to 72,000. I'm probably going to be a buyer in that range, as that is where I think that you're going to get, as that's where I think the pullback is going to take you in Bitcoin. So I think once you get into the low 70s, I'll probably start to buy some, and I'll buy it all the way down through to 70, 68 or so. But we kind of came in with a bearish stance on Bitcoin today, and that led Shy into, you know, one of the top trade ideas was short Coinbase, as Coinbase had gapped underneath the previous day's low. And once you gapped underneath that previous day's low, you can see that the high of the day today lines up exactly dead even with that prior low. And that was really the entry opportunity there. Was you see the double bottom that was put in place on Friday. I'm just recapping with you guys what was the top gaining trade today inside of True Trading Group. And again, this was a 350% gain by Shy, one of our moderators inside of True Trading Group. And it would put options on Coinbase. And once you kind of top that out right off the open, you kind of rallied into, you tried to get back above VWAP, couldn't, and then you broke down through that low. And it was right in here is where Shy went ahead and grabbed those put options on Coinbase and then rode what is a pattern that we talk about, which is a trade line VWAP cross to the downside. And that's exactly what led to, this huge sell-off there in the morning. And Shy was able to rip profits off into that. Way to go, Lee. Lee had a over 300% gain on SPY puts today. That's awesome. That is incredible. Way to go, Lee. Way to go, Lee. A 300% gain on SPY puts. That's what I'm talking about. These are the opportunities that way to go, Peter. Biggest day this quarter, Tesla puts and some long-term nibbles. 15% of my desired position size is only possible with the education I got from True Trading Group. That's incredible. Really great job. Hey, way to go, Roger. Made a little off some SPY puts today. Roger's a brand new member, guys. Brand new member. Roger literally just joined. Just the other day. So congratulations, Roger, making your first moves here with True Trading Group, making them count. Really nicely done, man. Congrats. First of many more to come. And then you just it rolled over. Coinbase completely rolled over and rolled it over right into the close. And Shy was taking some profits off right into the close, up 350%. I think she still has a runner. Members, if you want to help me out on that, just to confirm, I'm pretty sure she still has a runner. And guys, a runner is either is usually around like 10% of the original position size. Something like that. Way to go. Controversial Cricket got 150% gain on some Tesla puts. Well done. This is what I'm talking about. This is why I love when stuff like this happens, because it does a couple of things, right? It does a couple of things. Why do I love when stuff like this happens? No, I don't love, watching my long-term portfolio go down in value, right? I don't love that. I don't love watching other people, lose money in their long-term portfolio. But stocks can't go up forever. And the whole concept of the stock market is to buy low and sell high. And in my stock market outlook report that I published for members in True Trading Group, which is what I publish every single year, you guys get a report at the end of December or the last week of December, or the first week of January. And I pointed out in the very beginning of that report how expensive stocks were coming into 2025 and how valuations were near record highs, and how it didn't leave much room for any type of a slip up. It didn't leave much room for error. And any type of sign that earnings weren't going to meet expectations or any type of a growth scare meant that markets had a sizable amount of room to the downside because they were so incredibly expensive. And stocks were priced for absolute perfection. Stocks were priced for nothing is going to go wrong. You had the election. Everyone said, all right, deregulation, high growth policies. These are all the things that everybody was excited about going into 2025. And the markets just totally forgot about the possibility of tariffs. And tariffs are a very big wild card that will probably be the deciding factor of what happens with this market pullback over the course of the next month or two, whether or not this pullback is just a correction or if we fall into a full-blown bear market. It's probably tariffs that will be the variable that are going to decide that. And that's what makes the market so volatile right now. You guys have to realize that the market is a forward-looking mechanism. Okay, the markets trade not on what's happening today. The markets trade and markets price in the next 6 to 9 months out. Okay, 9 months out. And when the market can't see that far into the future, it gets very upset. When there is something in the way, when there is something that is cloudy, that cannot be factored into any type of model or algorithm, the markets throw a little bit of a hissy fit. And tariffs are a variable that nobody can determine what the outcome is going to be. They can come on, they can come off, they can go up, they can go down, they can go on one country, off another country, they can go on one product, off another product. Nobody knows how that's going to play out. And since that's the case, you can't factor that into any type of a pricing model. That leads to uncertainty. Uncertainty, by really definition, equals risk. And when you have an uncertainty, a level of uncertainty, the markets need to elevate the risk that they're pricing in, because the risk of an adverse outcome goes up when there's uncertainty of one or multiple variables. When you break the markets down just to pure math, right? It's an unknown variable, and therefore you need to price in additional risk of that variable becoming, or that variable leading to a negative outcome rather than a positive outcome. It doesn't mean that that variable can't be a positive outcome. It can, but it also could lead to a negative outcome. And that uncertainty is what makes the markets get very upset. And that's when you have pullbacks. That's when you have corrections like you have now. That's how you get the worst day that the markets have had since 2022. Now, you had a full-blown crash. Okay? Full-blown crash in 2022. Full-blown bear market in 2022. But it did not lead to a recession in 2022. You had a full-blown bear market, though. Okay? And in 2022, you had a lot of different reasons for the bear market. The bear market in 2022 was, a inflation-driven bear market. It was a rising interest rate environment. The Fed was raising rates violently, and inflation was rising out of control. And those are the reasons why the markets headed to the downside. And the unknown variable was, how high is the Fed going to raise rates? How high is inflation going to go? When is inflation going to get under control? Those were the variables that the markets really couldn't figure out. And you got some months where inflation was better than expected. Other months it was worse than expected. Sometimes the Fed would cut rates. Sometimes they would cut rates by less than people thought. And you had a lot of volatility and a lot of big ups and a lot of big downs in 2022. But in 2022, you had a full-blown bear market, which means the markets went down by more than 20% off of the highs that were put in place in 2021. Now you fast forward to 2025, and we're not quite in a correction on the S&P. We are in a correction on the NASDAQ. So the NASDAQ is in correction territory. We're down well over 10% from the current market high. And it is a nasty current market high because it's a double top too. So if you look at the NASDAQ, you have this very strong double top, okay, right here on the NASDAQ, that has also led you down into this correction. This is a full-blown correction on the NASDAQ. It is a full-blown correction. And your next major support, there's other support levels before that. I'm not trying to scare anybody, but I'm just showing you major support level, okay, is the previous all-time high that we broke in early 2024. and then sat back against it, retested in April, and it became support, and you rallied from there. That is a massive, I'll go to a weekly chart, you can see it. That is a massive level of support. And again, I'm not trying to scare anybody to say, hey, I think that the NASDAQ goes all the way down here. I do think the NASDAQ has more room to the downside. I don't know if we get all the way down to 410. You're 472 right now. I don't know if we get all the way down there. I think we'll fall short of that. I think you might fall like maybe into here or so. Maybe to 440 or 450, maybe just right inside of like this region here. I don't know if you get all the way down here, but if you do get there, I'm just telling everybody here now that I am a buyer. I'm an aggressive buyer of tech stocks. If the NASDAQ gets down to like 410, 420, I will be an aggressive buyer of the NASDAQ if you get down into that region. But I'm just not so sure that we're going to get that. We're going to get that low. But I will be a buyer there if and when we do get there. Okay. But what you have happening right now is what I'm waiting for the SPY to get to, or the S&P to enter correction territory. And I think that the probabilities of us entering correction territory are very, very high. I don't think that the volatility is finished yet. I really don't. I don't think that, well, that's the thing. Phony Baloney says these dips are being bought up and this is temporarily a bear market. It's actually not a bear market yet. And it doesn't mean it can't become one, but it's not a bear market right now. You guys have to realize there is a very specific definition of what a correction is and what a bear market is. It's not up for interpretation. Okay, a correction is a 10 to 19% drop from the highs. A bear market is a 20% or greater drop. It's not up for interpretation. Those are the literal definitions of correction and bear market. Okay. So it's actually not a bear market right now. It was a bear market in 2022. I'm not saying it won't lead to a bear. It could. I think it's possible that the NASDAQ could enter bear market territory, but not the S&P. That's what I think. I think it's possible you could see it on the NASDAQ, but I don't think that the S&P enters a bear market this year. And I'll explain to you why, and I'll explain to you my outlook and the outcomes that I'm thinking about, and when and where I'm going to start to buy some stuff. I had somebody that messaged me today. It's so funny when I get these messages. I'll read you these messages, literally. Ready? Here it is. Here's a message. Damn, it would have been really smart to pull out a few months ago. I heard all the big 5 tech companies are going to lose the most this year. I mean, yeah, I guess it would have been smart to have sold out 1 month ago. You could have sold out literally 1 month ago when the markets were at all-time highs. But this isn't, I know this feels bad because you're looking at stocks like Tesla down 50-something% from their high, but this really isn't anything that dramatic. It really isn't. Like, honestly, like you look at this pullback that we just got, it's like that's not that, it's not that crazy. It's not that crazy. Like you all went through this. You all went through this. Like, it's not that crazy yet. This was much worse. This was worse. I'm not saying it doesn't get to that point. It could. But I'm going to be a buyer in correction territory on the S&P. Like this whole region right here, I'm buying this, right? Like I am buying down here. Okay. I will be a buyer down here on the S&P. And let me explain to you why. Okay. Here's the outcome that I'm thinking about. And the outcome that I'm about to give you is in no way, shape, or form an indication of like a political view or a political belief. It is just the outcome that I think is going to pan itself out. And there's certain variables that if I'm wrong about how these variables pan themselves out, then you'll probably lead to a recession. The reason why I think that the variable of whether or not this market pullback gets worse is tariffs or not, because that's the unknown. That's the uncertainty that the market doesn't like. I don't necessarily think that tariffs are going to be here for a really long time. I think that it's going to get worse before it gets better leading up to August 2nd. August 2nd is the deadline for reciprocal tariffs. That's when I think things are going to get nuts, because any country that has a tariff on anything from the US, we're going to put an exact tariff on theirs. So if somebody has a 100% tariff on us for a particular good, we will place a 100% tariff on them for the exact same good. So like India, for example, has a 100% tariff on US automobiles. So if Ford and GM were to make a car and they want to sell it in India, they got to pay 100% tariff. So that means that we're going to say, okay, India, we're going to place 100% tariff on you. And that the same goes, and there's South Korea. South Korea has, I forgot what products specifically, but South Korea has 100% tariff on certain products from the US. So we're going to place 100% tariff on theirs. So it's going to be way worse than people are worried about a 25% tariff on Canada and Mexico. You're talking about much larger tariffs with all of these other countries. And that is what I think is going to really cause even more volatility possibly than what we see now. So April 2nd is going to be huge. And leading up into April 2nd, I expect there to be, I expect this to be like you're going to get a lot of news headlines from a lot of different countries leading up to April 2nd to try to negotiate before the reciprocal tariffs come on. But then once they actually come on, you're going to get a lot of back and forth of, what products are not included with this, you're going to get a lot of back and forth. But what I've seen so far, okay, and this is why I don't believe tariffs are going to be here for an extended period of time. And I'm going to lay out for you my entire outlook. What I have seen so far, okay, from Trump, and this is what I'm doing. I'm not listening to what he says. I'm watching what he does. And, same thing really has to be said, like when it comes to the Fed. You can't really necessarily listen to what the Fed says. You have to pay attention to what they do, because words is an effective form of monetary policy. In this situation, I also think words are an effective form of leverage for negotiation. And what I've seen so far is multiple times a little bit of a walk back or an easing of the tariff situation between Mexico and Canada. It wasn't just like in 2018, because I was here in 2018, obviously, I've been doing this for 18 years. I went through the US-China trade war, okay? There really wasn't any softness with that. There really wasn't all right, well, we'll tax these products this amount, but not these. And we'll do some of this, but maybe not that. It was just, hey, we're slapping these tariffs on you and go F yourself. And you had this big butting of heads between the US and China. Now, that trade war worked. And those tariffs, it renegotiated trade agreements with China. Those tariffs were put on China. Those tariffs have stayed on China up until this day. Those tariffs are still there from 2018. And it was able to generate a lot more revenue from trade with China, specifically those tariffs. But it was a very different scenario. Inflation at that time was 1.7, 1.8. You have an extremely different inflation environment here today. The economy is also in a little bit of a different place than it was in 2018 than it is today. So it's not necessarily the same. But what I have seen so far with Canada and Mexico, and that's all we can really look at is Canada and Mexico, is not the same type of harshness. It was 25% tariffs, and then it was, we're going to delay the tariffs. Okay, we're going to delay the tariffs. You guys have an extra month. We're going to delay them. Okay, that's different. That didn't happen back in 2018. Then you had, okay, we're going to put 25% tariffs on everything but energy. Energy, we're actually going to put like a 10 or 15% tariff. So it's going to be 25% on everything except energy. That we're not going to tariff as much. Okay, well, that's different. And then it was, we're going to tariff everything except what's compliant with the USMCA. Okay, well, that's only half of Mexico, and it's 38% of Canada of what's complying with the USMCA. So that's different. So all of these things are, hey, I'm really going to threaten you with tariffs, but I'm going to make the tariffs as easy as they could be, rather than a very harsh, I'm putting tariffs on and we're not budging and I'm putting them on this day, tomorrow, and that's it. I don't want to hear anything about it. Right? That's a little bit different. So that tells me, and again, this is independent of any type of political view, political opinion, or political belief. I'm just going off of what I'm looking at. Okay. That shows me someone that doesn't just want blanket tariffs on forever. That to me looks like someone that's trying to use tariffs to negotiate something or to do something else. What is that other something? You guys, we can all debate that. Okay. But it doesn't look like someone that just wants to put tariffs on and keep them there for a year. Now that has a lot to do with my outlook for this year. The reason why I don't believe that we're going to have a recession this year is because I personally don't believe that come the third and fourth quarter of this year, that these tariffs are still going to be here. If you think that the tariffs are still going to be here, and that's, your opinion, you are more than entitled to it, obviously. If you really think that they're still going to be here in November, then we are probably already in a recession at that time. And that recession probably rolls into 2026. And then the markets probably bottom out in 2026 and the Fed cuts rates and the economy then maybe recovers and the stock market recovers by the middle of 2026. We've bottomed out and markets, will start to recover probably second half of 26. Okay. If we still have these tariffs at the end of the year. And that's possible. We very well could. And that's why I'm saying that's the variable that nobody knows about. But here's the outcome that I think is going to play out. The outcome that I think is going to play out is we're going to have more of a growth scare. I don't think this growth scare is over yet. I think that the recession odds are going to go higher. I think that the unemployment rate is going to go higher. I think that the reciprocal tariffs are going to come on. I think that volatility is going to accelerate. I think the VIX is going to spike to the 30s or 40s. I think that the S&P is going to go lower. I think the NASDAQ is going to go lower. I think it's going to go lower. Okay. I think we are going to go lower. And then is when I think things change. There's a lot of different moving parts to this. See, a lot of people think that this is just like, oh, he's crazy. He's a madman. He just, wants to put tariffs on for no reason. That's not what's happening. He's taking a big risk. He's taking a big risk. If he gets this wrong, we're going to have a recession. But if he gets it right, the markets could be back to all-time highs by the end of this year. And here's what that looks like. If there's a short-term shock with tariffs, that immediately causes growth concerns. That's what's happening right now. It immediately covers growth concerns or immediately causes growth concerns. Okay. That's what's happening right now. Growth concerns cause a flight to safety, which brings buying pressure into bonds. Buying pressure that comes into bonds makes bond prices go up and it makes the yield on the bonds go down. There are $10 trillion that need to be of debt that needs to be financed this year. If you stand any chance of trying to improve the deficit or trying to get our debt under control or trying to balance the budget or any of the things that Trump says that he wants to do, if you stand any chance of really progressing towards that goal, you have to bring down our debt payments. You have to. We cannot continue to take out more debt than what we're bringing in revenue, especially when interest rates are at 5%. Too much of the revenue that's generated goes towards just paying the interest off on our debt. That's a real problem. That can't continue. But if you have a growth scare and there's an economic shock with the short term is the key. It's got to be short term. That causes concerns about economic growth. That brings down interest rates. And if interest rates come down, let's say the 10-year continues to fall as growth scares continue, and the 10-year gets to 3.9%. If you are able to finance that $10 trillion of debt at 3.9% instead of 4.8%, that is a massive win. It's a massive win if you can do that. This tariff shock can allow that to happen. It's already happened. The 10 years gone from 4.8 to 4.2. Now it's like 4.3. But if you can get the 10-year underneath 4, that's going to be very good for the middle of this year when we have to finance the $10 trillion of debt. So that would be a positive thing. But in order for that tariff shock not to lead to something more severe, you need inflation to come down. If inflation does not come down, then it's not going to work. So how would you get inflation down? Well, a growth scare gets inflation down. But what else would get inflation down is you were able to bring down the price of oil underneath $60 a barrel. Oil has already fallen from $80 a barrel to $65 a barrel. Nice drop. But if you can get oil underneath $60 a barrel, that's going to really help to bring down inflation. How do you get oil under $60 a barrel? Well, oil will fall naturally on the back of growth concerns and economic concerns because demand goes down. So 2 ways you can bring down a price of something is to drop demand or to increase supply. Well, demand is dropping because of the growth scare. Here comes the supply part. The supply part, if you're able to end the Russia-Ukraine war, then that means the oil sanctions on Russia can come off. That allows Russian oil to flood the global market. That increases supply and brings down the price of oil. So if you have a scenario where the 10-year yield drops, you finance a $10 trillion in debt at 1 full percentage point lower than what it was previously. The Russia-Ukraine war ends, oil drops underneath $60 a barrel, and the tariff shock comes off. Then the Fed starts cutting rates. And if the Fed starts cutting rates in, let's say, the June meeting, let's say the June meeting, we get a 25% cut. And then 2 meetings later, another 25% cut. And then going into the end of the year, another basis point cut. Then you're looking at a second half of the year without tariffs, without Russia-Ukraine war, with low oil prices, inflation headed back down, and the Fed cutting rates. That is a backdrop that I, as an investor, would want to be long. Now, those are a lot of big ifs in there. I said if many times, and that is me recognizing that some of these things may not happen. Maybe the Russia-Ukraine war doesn't end. Maybe inflation doesn't come down. Maybe tariffs stay for an extended period of time. But from what I've seen so far from Trump's actions with Canada and Mexico, it is a different type of tariff Trump from 2018, which makes it look to me like he doesn't want this fight to last for a very long time, that he wants to use the tariffs to do a specific thing, and then if he can, get rid of them. I think it's going to come down to just how much do these other countries fight. I don't know how much these other countries fight. China announced today that they're getting together a summit with the United States in the next coming months. You bet your ass they're talking about tariffs and they're going to talk about trade deals. Okay. I don't know how much these countries are going to fight. Some of these countries don't really have enough of an economy to fight. Some countries can't play chicken with the US. Some can. China could play chicken with the US if they want to. A unified Europe could play chicken with the US if they want to. But are they going to? I don't know. I don't know if you're going to. Europe now is talking about having to drastically increase their defense spending because of what's going on with the U.S. and Ukraine and the U.S. not wanting to support Ukraine at the same level financially and NATO and everything else. So now all these European countries are saying, well, now we have to take out more debt so that we can increase our defense spending. So if you're those countries, are you going to want to play chicken in a trade war if you're trying to take out more debt to increase your own military and defense spending? Probably not. So I don't know how long these games of chicken are going to last. That's why I don't think it's going to last very long. If I'm wrong about that, then we probably have a recession. I don't think we're going to. I don't. And I'm putting that in with my own I'm putting my own money to work on the back of that. I'm buying, well, I will be buying the correction. Okay. When I see the S&P down 10, 11, 12%, I'm buying. And then I see the S&P down 16, 17, 18%, I'm buying. I'm not waiting for a 25 or 30% drop in the market. Maybe I'm wrong. Maybe we do. Maybe we have a total bear market. Maybe we go into a recession. And if we do go into a recession, it's probably because I was wrong about tariffs, and the tariffs are here for a much longer period of time than I thought that they would be. But if, and again, it's a big if tariffs are off, if oil's under 60, inflation's coming down, the Fed's cutting rates, I want to be long that scenario. That's what I think. That's it. That's what I think. Where's SPY looking to go tomorrow? I need 550 to make today's losses. Nah. It's dug in. Wrong way, dude. Wrong thought process. Wrong thought process. Don't think like that. Don't think like that. That's the exact opposite of what you're supposed to do as a trader. It's the exact opposite. Seriously. Don't try to make back what you lost in a particular day. It's, you're going to get yourself into a lot of trouble thinking that way. And you're going to, you're going to find yourself in a situation, you're going to overtrade, you're going to revenge trade, you're going to hold on to positions longer than you should, you're going to over position size, you're going to chase moves. Don't ever, I'm telling you that you're going to get yourself into a lot of trouble thinking that way. Like, oh, I lost $550 today, I got to make it back tomorrow. You're going to get yourself into a lot of trouble. You got to treat every day differently. Every day you got brand new opportunities, brand new setups, but if on a short-term basis, we are very oversold. On a short-term basis, last night I said that we gapped down on the futures session last night when we were doing our live stream last night, and I said, listen, because we're oversold. So I'm looking for sign. I'm going to look for a sign of the markets kind of starting to reverse course a little bit. And I said yesterday that if that gap down got bought back up by this morning, that I was going to go long on stuff. Well, we woke up this morning and we were down further than we were when the future session opened. So it was all hands off on any longs in the overall markets. There was nothing there to give you a long. Obviously, we sold off very hard today once you had the extended gap down, and there was just nothing there, no opportunity to go long on an index or the overall market type of thing. Some individual stocks, sure, like if you were looking at specific names, like in the defensive sector, not defensive sectors, some stocks went up, like, a couple of healthcare names, some consumer staples went up. But for the most part, most of the market sold off today. So we are oversold on a lot of different metrics. You are oversold. And usually when you have market pullbacks and the markets are accelerating to the downside, that's when you get your biggest updates. If you looked at like the 10 biggest green days in the market history, most of them occur actually in bear markets, or they occur during stock market crashes. We're not yet in a bear market. When I say the markets are crashing, I would say that a little bit because of the speed in which we're falling and how quickly we have fallen. But even with how quickly we have fallen, I really still haven't seen panic. And this is what I was talking to our members today. I haven't seen panic yet. It's actually been a rather orderly sell-off. To me, this just feels like sell programs, algorithmic selling programs that are just liquidating, and they're just risk off, risk off, risk off, risk off. I haven't seen that like capitulation panic where like retail runs for the exits. You haven't seen it yet. The VIX hasn't spiked yet. The VIX has been crawling to the upside. That's not a sign of a bottom. You really want to see the VIX blow out. You would let the VIX totally blow out. Let the VIX shoot to like 38. That's when you know that you're like, all right, now we're flushing it out. Everyone that wants to sell is getting out here. And then you can look for that tradable bottom. We haven't had that yet. It's part of the reason why I still think that there's more room to the downside. But I'm waiting for it. I'll show you the VIX. You see what I mean? This isn't a blowout. This is not a blowout. You want to see a blowout? That's a blowout. That was the August 5th Japanese yen carry trade, which ended up being, that's the last real long-term portfolio buying that we did. I mean, like aggressive buying. I bought aggressively on August 5th. And you see the blowout on the VIX. That's what you want, not this. This is just a stair step. That is not indicative of a bottom. You want to see this thing like, maybe you pull back a little bit, and then you bounce back up, and then you go up, and then you just like, you do this. Like, that's what you want. And then it's like, all right, there's your blowout. All right, now let's step in and start to buy some stuff. So it just hasn't happened yet. I mean, when it does, I'm buying stuff. I'm just telling everybody that now. When it does, I'm buying stuff. But what I think is probably going to happen in here is you're probably going to get a bounce, and that bounce will then run out of steam, roll back over. You'll break today's low, and then you'll get the panic, I think, leading into the month of April. So what I'm thinking about maybe, potentially happening here is the markets try to bounce. Like, I don't know when this bounce comes. I'm not a psychic here. I think a lot of people look for like traders that predict the future. Good luck. There's a lot of catalysts coming up that could potentially cause that bounce, like job openings tomorrow morning. If the job openings tomorrow morning are higher than expected, some of those recession fears are going to ease. And that's going to bring buying pressure back into the markets if recession fears ease. And if the markets are expecting, I don't even know what the expectation is. I have to check. If you're expecting, 8 million job openings and it comes in at 8.11 million, then the markets will probably bounce back. And then you got CPI inflation on Wednesday. And if the CPI inflation comes in line with expectations, or if it's under expectations, the bounce could continue, and you can get, maybe the markets do something that looks like this, right? And then people are going to think to themselves, oh, hey, looks like the markets are really bouncing back. But then you run out of steam up here. You run out of steam. You run right into the 200-day moving average. This yellow line is your 200-day moving average. And then here's the 9 EMA, this light blue line. The light blue line comes back down into play, creates that level of resistance. And then you roll yourself back to the downside, right? And then you get more, maybe there's more tariff news, or you get more jobs numbers, and the markets do this. And then this starts to create a little bit more of an element of panic. And then you can get more acceleration to the downside. And then maybe that could then blow up the VIX. That could blow up the VIX. That could be what we need. So I think we're getting ready for a short-term bounce here. But I think that short-term bounce doesn't last much longer than maybe a week. Maybe a couple of days to a week where you push up to the upside. A 7.71 million. Okay, thank you guys. Glennie, Terry, thank you guys. So 7.71 million job openings is what's expected. Now that number is very low. Okay, the last couple of job openings numbers that we've had were, the expectations were well above 8 million, and they came in way under. Okay, the last 3 months, maybe. I think maybe the last 3 months, The job openings number has come in under expectation, maybe even longer than that. I have to, don't quote me on that. I have to go back and check, but you've gotten a few softer than expected job openings. And when I mean softer, I mean like hundreds of thousands off. Okay. Not just like, oh, a couple thousand. Like, no, they were way off. So now 7.71 is actually low. So if you get like a 7.8, you can bounce back tomorrow. You could easily bounce back tomorrow. You can have a 650 point day on the Dow tomorrow. You know, you can get the markets do something that looks like this easily. And then you got CPI. And if CPI comes in light, maybe the markets do that. But then that's when I think you start to run into problems. That's when I think you start to run into resistance. And I do think the markets do continue lower. So just on a short-term basis, I feel like we're a little oversold. I think you might get a little bit of a bounce. But I just don't think that bounce lasts very long. Okay. Those are my thoughts. So I do still think we have more downside. You're in a you're in a sell the rips, not a buy the dips market right now. Every time the markets move higher, it gets rocked. Just look at the last three big green days. Rocked. So 3 days where the markets tried to bounce and you could not. You got 1 day. One big up day, rocked. One big up day, rocked. One big up day, rocked. This is not a buy the dip market. This is a sell the rip market. And like I said to you, I am targeting correction territory on the S&P. Now, a correction on the SPY, a correction takes you to 552. Okay? 552 on the SPY takes you into correction. So we're almost there. I mean, that's the SPY. The S&P will be a little bit different. The S&P might enter correction sooner. When Bitcoin hits 74K, we'll be at a 15% correction. How much more are you thinking? You know, Tony, that's a good question. I do think that you're going to overshoot it. I know the level you're talking about, Tony, and you're right. You're 100% right. And I'll just take you to the chart. I already have it drawn on my screen. That level's already there, right? So the thing is about this, Tony, that everybody sees this level. And Bitcoin is notorious for piercing levels. Bitcoin's notorious for overshooting levels, right? It's an extremely high momentum asset. It's like Tesla. Like Tesla always overshoots levels because when Tesla gets momentum, it rips, right? Whatever the direction is, when Tesla has direction and momentum, it always goes further than people think. It goes further to the downside than people think, and Tesla goes further to the upside than people think. Bitcoin does the same thing. So I would expect Bitcoin, when it gets into the mid to low 70s, I do think that's a spot you can start buying. I'm going to start buying in the low 70s, but I think it overshoots it. You know, I think that you probably see Bitcoin into like 68, 67, and make everybody in some overnight session, make everybody feel like the level's broken. And, you shoot to like 69.5 in like an hour. You go from like 69 to 66.5 and everybody panics. And you put in this massive bottom tail and it pops back to 70 and then never looks back to 66. And then it probably consolidates 70, 80s, 70s, 80s, 70s, 80s for the next consecutive months. And I think that becomes a new trading range, and you probably go through a little bit of a pause period similar to what you had in 2024. And I think you go through this new pause period in that 70s, 80s, 70s, 80s, until eventually I am bullish on Bitcoin near term. When I say near term, I mean over the next couple of years. I am bullish, and I do think that you'll eventually make your run to like 150 or so. But I think you're going to overshoot the low 70s and get into the 60s. and probably drop into like here, right? Like do something like that. Everyone's like, oh my God, the level's broken. And then it does that, right? And then this becomes your new trading range. Okay. So that's what I'm thinking about, right? Nice, Tony. You agree? Nice, man. I'm not sure, Tony, if you're I don't think you're a member. I don't recognize the name, but I'm not sure, if you are, if you're new or if you're an experienced trader. It sounds like you have some experience. So that's kind of what I'm thinking about. That's kind of what I'm thinking about on Bitcoin. And, seems like you agree, and great minds think alike, right? Great minds think alike. Oh, you're AKC. Oh, nice. So you are a member. I didn't know that. Well, that's good to know. You're AKC. So you're a new member, but you are a member. Nice. Yeah, Tony, those are my thoughts. That's what I think on Bitcoin. So, I'll probably be a buyer of Bitcoin 68 to 72. That's probably where you're going to see me do my buying, 68 to 72. Okay. So that's that, guys, and listen, those of you that are not members of True Trading Group, I can tell you guys now, if you guys are interested in joining the community, just do yourself a favor, go to ttgoffer.com. And you might say, well, if you're not a member, why would you want to pay attention to anything that we discuss? Why would you want to be a member of True Trading Group? My answers are the same. People think that I'm going to say, well, you should join True Trading Group because I'm so amazing. That's not what I say. The reason why you should join True Trading Group is because our members are actually making money. And guys, do me a favor. If you're a member of True Trading Group, type the number 1. If you guys are making money, if you guys are becoming better traders because of TTGs, go ahead and type the number 1 in chat right now. Again, if you're a member and you guys are making money, type 1 in chat right now. I think it's important. A lot of people are nervous right now. The markets are going down. People are scared. So there you go. You see all these people that are typing the number 1. These are members of True Trading Group that are making money. And that's the reason why I tell people that you should join True Trading Group. And if you guys are interested, you can go to ttgoffer.com. Everything on that page is included. I will tell you this. We have 4 laptops. That's it. 4. The next 4 people that join True Trading Group will get a brand new free laptop with their membership. However, if you do not want a laptop, I'm trying to save these laptops for the people that really need them. If you do not need a free laptop, instead you'd rather have a cheaper price to join True Trading Group, just send a text message to 1-888-621-2127. Like it's 1-888-621-2127. Best month in years, and it's only the first week. J.E. Blanco, way to go, man. Congrats. It's been a huge last couple of weeks inside of True Trading Group. Okay. So Paul, what's up, Paul? Paul says, how much is it? All right. So Paul, listen, if you go to ttgoffer.com, everything on that page is what's included in your membership. The membership is $1,047 for the whole year. There's no upsell for anything on that page. Okay. It's all included. All right. You also get a double your money back guarantee, which means if you can't make your membership fee back at least once, we give you back $2,094. Okay, you just have to go through our courses, pass the quizzes, attend the study group, and just actually use the membership that you're subscribing to. And if you can't make back your membership fee, we give you back double. Nice, Pamela, welcome. Yes, Joe just let me know that Joe signed you up earlier. So Pamela, welcome to the family. It's about time, Pamela. It's about time. I've seen you on this live stream many times. I'm glad to have you officially part of the TTG team. Okay. Officially part of the TTG team. Pamela, welcome. I'm glad to have you. But yeah, Paul, $1,047 for the whole year. But that includes a free laptop, Paul. If you do not need or want a laptop, we will give you a cheaper price. And again, it's good for the entire year. All you need to do, Paul, send a text message, and this goes for anybody else. Just text 1-888-621-2127, and they'll go over the details. They'll give you the price, and they'll work out a deal with you if you don't want the laptop. Okay. So the phone number is right down there at the bottom of your screen. You guys can text that number with any questions. You have any concerns about you want to know about the W1 back guarantee. You want to know about me. You want to know about the mods, whatever. Okay. But your membership includes all of our courses, which is a simplified version of the training I received when I worked at a fund in New York. You get Benzinga Pros, a real-time news feed. You get TradingView's premium charting software, the Trade Ideas scanner, unusual options activity, options flow, dark pool data, short data, congressional trading data. All of this is included in your membership. You don't have to pay anything extra for them. Like you might pay for Trade Ideas. You might pay for Benzinga. You might pay for unusual options activity. You might pay for dark pool data now. When you join True Trading Group, you don't have to pay for those things. It's all part of our platform. It just comes with your membership. So if you want a free laptop, go to ttgoffer.com. The price is $1,047. If you do not want the free laptop, we'll give you a price significantly cheaper than $1,000. You just have to send a text message to the phone number at the bottom of your screen. 1-888-621-2127. We do cover the shipping for that laptop for those that want it. We ship anywhere in the world. We have members in 114 countries. As long as you live on planet Earth, we'll get you guys that laptop. Okay? So that's it. All right. So ttgoffer.com or 1-888-621-2127. That's it, folks. All right. Have a wonderful rest of your night. We'll see what happens tomorrow. Like I said, I do think that we are oversold. The job openings are going to be important. I don't know if this momentum stops prior to that. You might be weak in the morning because the JOLTS number comes out at 10 o'clock. So you might be weak to start the morning. You might have another gap down. You might sell more from 9:30, but we'll see what happens with the JOLTS number at 10 o'clock. That could potentially change the attitude and change sentiment and cause a little bit of a bounce. It would be interesting if tomorrow you're at today's low and the JOLTS number comes out stronger than expected. You would run the risk of a potential double bottom and a candle tomorrow that could look something like this. But again, when that snapback comes, I wouldn't get too excited. I don't think it lasts very long, maybe a week. A couple of days to a week until I think you run out of steam and the markets start to trade back towards the downside. Okay. So I still do think there's more downside. I still do think there's more downside to come. Not that much. I don't think we're going to be down 30% this year. But I don't think we have found the bottom yet. All right. That's it, folks. Have a wonderful rest of your night. Subscribe to the channel if you haven't done so already. I'll see you guys all tomorrow. Take care, folks.